XRP is one of the most talked about digital assets in crypto. But if you're looking at it as an investment, forget the hype for a minute. The real question is much more important. What is XRP actually built to do, and what has to happen for its investment case to become stronger? First, separate three things. Ripple is a private financial technology company. The XRP Ledger, or XRPL, is an open-source public blockchain, and XRP is the native digital asset of that network. Buying XRP does not mean you own Ripple stock. You don't receive dividends, ownership, or a share of Ripple's profits. So what is XRP designed to do? At its core, XRP can help move value quickly and inexpensively. On the XRP ledger, transactions can settle within seconds, and XRP can be used as a bridge between different currencies or assets when that route is efficient. Think about an international payment. Traditionally, moving money between countries can involve correspondent banks, foreign exchange conversions, delays, and money sitting in pre-funded accounts. XRP can potentially provide another route. One currency can be exchanged into XRP. XRP can move across the ledger and then be exchanged into the destination currency. That's the basic XRP utility argument. But here's something XRP investors should not ignore. Not every Ripple transaction requires XRP. Ripple can also work with traditional currencies and stablecoins, including Ripple USD or RLUSD. So the investment thesis cannot simply be Ripple grows, therefore XRP goes up. The better question is whether XRP itself becomes increasingly useful for liquidity, settlement, foreign exchange, and tokenized financial markets. And the environment around XRP has changed significantly. In August 2025, the SEC and Ripple dismissed their appeals, bringing their long-running civil enforcement case to a close while leaving the court's final judgment in place. And today, US-listed XRP exchange-traded products provide another way for investors to gain exposure to XRP without directly holding the token. Meanwhile, the XRP ledger continues expanding into payments, stablecoins, decentralized exchange, and tokenized assets. So what should an XRP investor really be watching? Not headlines. And definitely not wild price predictions. Watch real transaction volume, watch institutional and payment adoption, watch liquidity, watch stablecoin and tokenized asset activity on the XRP ledger, and most importantly, watch whether XRP itself is actually being used as a bridge and settlement asset. There are risks. Crypto is volatile. Competition is intense. Stablecoins can perform some of the same payment functions, and greater use of the XRP ledger does not automatically mean greater demand for XRP. That's why I look at XRP as a thesis, not a guarantee. If global finance continues moving toward 24/7 settlement, tokenized assets and blockchain-based payments, and XRP captures a meaningful role in that infrastructure, then the investment case becomes very interesting. So the question isn't, how high can XRP go? The better question is, how much real financial activity will actually need XRP? That's what I would watch. Watch the utility, not the hype.